You've been following the markets. The one place you want to have all your money tied up with, if that was possible, would be in platinum stocks. Again, a 5% improvement in the price today. And, well, this is on the back of, I wonder, Johnson Matthey's latest platinum review. David Jollie, author of it, is with us in the studio. David, when did your review come out?
The latest review came out in November, or mid-November. But obviously there have been a few changes in the market since then, with particularly the Eskom issues, which have certainly helped the platinum price higher, and they've had obviously an impact on the mining companies as well, but they've had a very clear impact on the market in general.
And is this the reason why we've seen platinum shares shooting the lights out in the last few days? Is there a realization around the world that perhaps supplies are going to be affected?
I think there certainly is. There's no doubt that we've seen several things going on. The rains in South Africa, we've seen Amandelbult flooded and closed, and we've seen the power outages causing some closure of mines, although mining has started again, clearly not at full pace because the power isn't fully back. And that does affect the supply side, and that's going to lead to a tight market. And although that means the number of ounces coming out of South Africa is likely to be lower, or lower than expected, it does mean that the price has been probably boosted quite significantly by that.
Just put that in perspective. What is South Africa's share of global output?
Well, South Africa produces about 5.2 million ounces of platinum compared to about 6.7 million ounces worldwide. And the other major producers, Russia really is the second biggest, and a little bit from Zimbabwe and also from North America as well.
So it is the player, it's the price maker, it's the dominant.
Certainly in platinum, it's the dominant player. Also in rhodium as well, and in palladium less so. The Russians actually export more. So South Africa has a less dominant position, although it's still an important player in palladium as well.
There were people who were believing that there'd be a surge in the platinum production with all the new projects going on in South Africa to boost supply. That hasn't yet worked up to expectations.
No, it's been, I think last year, for most people was a little bit disappointing in terms of expansions, and we saw a variety of reasons for that. We saw wage negotiations, which were not terrible, but not simple, I think, for the industry. We've seen skills shortages, and if you're trying to expand an industry, then you want skilled miners. And we've seen sort of health and safety issues come up again with a slightly different treatment of injuries and accidents as well. So that's kind of slowed things down. I have to say that we've been out looking at some of these newer projects this week, and there's clearly potential there for growth, but it's not a trivial thing to expand production from a mine.
And that's something that often analysts get wrong. Just because you put it on the chalkboard that this is what you'd like to do in mining, you never really know until you go underground.
Yeah, I think that's right. Until you go underground, you don't know quite how the ore is going to behave. You don't know whether it will necessarily go well with a smelter or something else. There are a lot of complexities there. But there's also just the challenge of getting the right number of people and establishing a working culture and establishing commercial relationships as well. And they're all challenges that are... they can be dealt with, but they take a certain amount of time to go through, and often people look at simply the best case scenario, and that's never necessarily the realistic scenario. There is expansion, but it's not a trivial thing. If it were trivial, I think people would have done these things some time ago.
I guess if you're trying to raise money for the expansion, you are going to emphasize the best case.
You see, people will certainly emphasize the positive. I think a lot of the junior mining houses are quite realistic. Not all of them, it has to be said, but they know there are challenges out there, but they know also what their reserve base is and the resources they have. So I think for an investor, you have to be just aware that the views will not necessarily be completely accurate. They're what they expect, what they anticipate, and what they hope to do. But there are always challenges along the route, and some people move faster, and there are examples of that, and some move slower than they'd expected.
You heard what Michael Spicer was saying a little earlier about the whole power issue here in South Africa. From a global investor's perspective, is the fact that we've had a force majeure at one point in power to the platinum mines as well as other mines, will that change the thinking in any way?
I think it makes people a little bit nervous about the market, but so far the market has responded relatively sensibly. The price has gone up. We're just still seeing trading happening. There hasn't been any sort of panic set into the market at all. So where you see nerves and not panic, that suggests that people understand that you will have issues. I think in Eskom the question is really how long this situation continues before it gets fully resolved. It's, perhaps we say 90% resolved at the moment, but until it's fully resolved, we won't quite know what the impact is. But for an external investor, it's certainly on platinum and I think on rhodium as well, where South Africa produces the bulk of the metal the world produces. It's an issue that they're aware of, and I think you'll see a lot of analysts here this week for a conference in Cape Town. And I think a lot of the questions they'll be asking will be about power supply.
It's interesting, there was a stock exchange news service announcement last night from Northern and Mbella on the Boysenville project, and in bold letters they explained what the power situation was going to be, which is not something that we've ever really taken note of before.
You'd never have seen that, I think, previously. You'd have seen things about water rights and about empowerment and other issues, but you would probably never have seen someone commenting really publicly about the power, even if that were arranged. And that was quite prominent in that announcement. So I think that does show that the mines themselves are aware. Investors have seen this. It's visible to the world, and it's an issue that's got to be dealt with. The mines are, working out how best to deal with that. Can they function efficiently on 80% or 90% of power? That clearly has an impact on supplies, but they can do something on that, and how they best organise things to save electricity and save energy is something they're working quite hard on.
So platinum investors will be having a look at the expansion program and saying, well, we've probably been given the best case scenario. There won't be quite as much platinum coming onto the market. Secondly, there could be issues with the power supply. So the supply of platinum to the market is not going to be excessive, at least. And even in the old scenario, you were working at a deficiency. In other words, supply not being able to meet demand.
Yeah, certainly for last year we saw a deficit of the market. Supply, sales to the market were less than demand, and what's taken out by consumers. And the issues that you're seeing this year, you might still see some growth in supplies, but that's a challenge. But certainly you're looking probably at a deficit again this year, and that points to probably a strong price performance. What we don't know is, in the platinum metal price, how much of this is already priced in there. So whether it's a strong performance from where we are today or from where we were 2 weeks ago, which is a little bit lower in dollar terms.
Doesn't there come a time when the platinum price gets to a level that the platinum consumers say, I'd rather go for something else?
Well, I think the consumers would often rather go for something else anyway. The reason they use platinum, and that was when it was $600 an ounce, or today when it's $1,740 an ounce. The reason they use platinum is because it is actually very good at what it does. So for a catalyst manufacturer, it still may make economic sense. But clearly a higher price causes them some pain, and they'll intensify their efforts to look at other metals. So if you look at the auto catalyst sector, you'll see increasing efforts to introduce more palladium into, say, diesel catalysts alongside platinum, but with that price differential, very significant price differential between the two metals, I think you would expect to see people putting the effort in there. So that's actually a positive in terms of constraining demand growth and bringing the market somewhat closer to a level playing field, but also hopefully boosting palladium demand. And palladium is in quite a large surplus at the moment. So it will help to balance these things. But it will depend from market to market. Clearly in the jewellery market, you might see a little bit more price sensitivity.
Have you seen much of that yet in jewellery?
I think we've seen over the years rather less price sensitivity than we expected. I think people, as the price has risen over the last few years, have said at every price point, well, maybe demand will fall off here or it will fall off a little higher. And we have seen that in some markets, but particularly the lower end of each market, where you have a more price-conscious consumer. In the bridal sector, platinum still is very strong in a lot of countries around the world. And at the higher end, it's actually quite strong. And if you look at China particularly, Matthey's research suggests that there's a sense of a store of value as well. So although affordability decreases as the price goes up, the attractiveness doesn't necessarily decrease. And you see a little price elasticity, a little bit of a decrease in demand as price goes up, but not necessarily as much as I think most commentators expect to see.
Is there much correlation between global economic growth and the price of platinum, given that much of the demand for investment comes from emerging markets?
Yeah, I think there's a certain amount of connection with it. It's not a simple connection, but certainly you can look at a lot of the same factors as in gold, say the platinum price. And economic conditions being a bit negative would suggest that Chinese growth particularly is an important thing. If that slows down, then platinum demand will soften a little bit. I think you still see probably some growth in demand. But it is important to look at these things anyway and say, yeah, this is, without cars being made, the amount of platinum required would be considerably lower.
You look at the whole picture, and now you're on the spot, the $1,740 an ounce for platinum, which is at or near record level. Is it sustainable?
I think in the short term, the elasticity in the market is relatively limited. So it's difficult to see demand suddenly disappearing. We have seen lower purchases in China from the jewellery industry at these very high prices. So in the short term, with limited scope for manoeuvre, I think prices could stay at this level. but there's now a lot of volatility in the market. And I think if you see a resolution of the Eskom issue, and if you see numbers coming out crystallising the effect of it on output from South Africa, that will help the market understand these things, and that may allow the price to soften somewhat.
Well, David Jollie giving us some insights into the platinum equation, and it is something that many South African and African investors indeed are keen on now. Good output coming from Zimbabwe, as well as South Africa being by far the dominant player in that sector. It does appear as though South Africa's biggest export earner, which is platinum, is set fair, at least in the short term. And even with that elasticity that David talks about, now it looks like there's a new base for this precious metal. And who knows, all the other funny things that are going on around the world, what kind of investment demand might be stimulated into the future. Well, that's all from Power Lunch in association with MoneyWeb. We're crossing out to CNBC Europe for Power Lunch Europe with Louisa Boyson. CNBC Africa will be back at 4 o'clock Central African time with regional updates.